When he put this on the market for rent, he was flooded with applications. The agent got several offers. They got offers more than 542,000, many offers more than that. He went in, did an inspection, called me back and said, everything's fine, no structural issues, you can go ahead with this property. So they are all still moving up. In another couple of years, I'm pretty sure this would have moved closer to. What if I told you that it's possible to build over 320,000 in equity, not in 5 years, not in 10 years, but just under 20 months? That's exactly what one of our clients did, and today I'm going to break it down all for you. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then head over to my website, Property Framework, buyersagency.com and book a session with me there. Today, I want to talk about how one of my clients who's nearing retirement, so he's a family man in his 50s, how he built 320,000 in equity by purchasing well-timed assets. So his long-term goal is actually sell down these assets upon retirement and live off the profits, or transition into higher cash flow assets like commercial assets, which will give him cash flow during that time of retirement. So either way, his goal at the moment was to build that equity so that he has options down the line. The first property that we bought for him, so this was in late 2023, actually December 2023. The first property we bought for him was in the suburb of Balga in Perth. Now Balga, for those of you who don't know where it is, it's a suburb which is about 12-13 kilometers north of Perth CBD area. These are the numbers that we got for this purchase. This was a property that was purchased for 540,000 on a 728 meter square block of land, and it rented out for $550 per week. Now I'm just going to run through the suburb metrics for you for Balga. So let's have a quick look at Balga. So this is the price trend for Balga, right? So in 2023, as you can see, the median price in Balga was just around 520,000, in that low 500s, right? So this we bought the property just around here, and we felt that it was a good time to buy because prices had just come back to the highs they achieved in 2012, and there was potentially much more room for growth in the Perth market. So this property has now moved up, as you can see the graph, which has moved up very strongly over the last 18 months or so. There has been really strong growth in Balga, and the property has now moved close to 750,000 in value. Let me just share the details of the property with you. This is the property, just the interior, very basic. It's an older home built in the 70s, so very old home, and the big feature about this property is that it's zoned R40, so which means that you can keep the existing block and build at the back, or you could demolish the existing block and build 3 houses there, right? So it's really appealing to developers. With this property, now I'm not going to sugarcoat it. At the time of purchase, we did have some issues with the property. We did have issues with the garage door, so that needed to be fixed, and there was some issue with sagging ceilings, which also needed to be addressed. So my buyer was happy to address these items. We negotiated down to a price of 540,000, but since then, he's not been having any maintenance issues. It's been an older home, but he didn't have any other maintenance issues. Just recently, about 2 or 3 months ago, a developer offered him 785,000 for this property, much higher than the valuation. So you can see how strong the demand is for properties like this at the moment in Perth. Why did we like this property? The reason why we liked it was only 12 kilometers from Perth CBD. Balga was pretty much undervalued, we felt. Looking at the surrounding suburbs, which had moved up in value, Balga was still sitting a bit undervalued and not where it should be. It had development potential on a large block of land, and it had close proximity into Perth CBD, only 12 kilometers from Perth CBD. The suburb hadn't grown as much. We saw a lot of potential there, and that was why we liked it, and we secured this property. Let's have a quick look at the cash flow aspects as well. So this was purchased for 540,000, let's say 6.50 interest rates, rents out for 550 per week. A cash flow, we're looking at the cash flow, it's going to be negatively geared by 10,454 per annum. Rents are already up on this property, so as you can see, by year 2 that's improving to 9,673, and then it further improves as you go down. But the big thing really here is that it's moved up in value by nearly 200,000 over just 18 months, and it's still moving up in value further. Very fast equity that was very much needed for him. A couple of few things that I want to talk about here, right? Balga is really pretty much a high crime area. It's a lower socio area. Typically, I know that some investors say that high crime, lower socio, don't invest there, but look at how well Balga has performed. So I just wanted to talk about, you can invest into these areas as long as you know when to buy, what to buy, and still get the required growth. The second thing was, I know some investors feel that all the properties, there'll be tons of maintenance issues, I'm going to have problems with them. But in this case, he just had to fish with some things up front, some of these issues, but since then there's been no maintenance issues after that on this property. And the third thing is, I know some people feel all the properties built in the 60s and 70s, no one would want to live here. But let me tell you, when he put this on the market for rent, he was flooded with applications. There were so many applications way above what the asking price for rent was, and the property was in huge demand. So it's about knowing where to buy, looking at the rental demand from tracking the vacancy rates by speaking to locals on the ground and knowing what the locals really want. So it's about knowing that and buying with confidence there. So this was the first purchase. I want to go to purchase number 2. So the second purchase, now we moved to Queensland. We moved to the suburb of Gracemere in Queensland, right? Now let me run through Gracemere with you. So Gracemere is just outside Rockhampton, not too far from Rockhampton CBD area, maybe about a 15-minute drive into Rockhampton CBD. It's a newer suburb, and it's a suburb where the families are moving in. It's a suburb where the owner-occupiers like to live. If I look, the property was purchased in around June 2024 last year. So let's look at the price curve for Gracemere. So you can see Gracemere has been going up since around 2020 and it's continuing to go up. So at the time of purchase, around June, we purchased it around here. This was where the purchase was, and you can see it's been moving up since then. We purchased this property. I'm just going to show you the property here. This is the property. So we purchased this at 500,000, and at that time it was renting out for around 480 per week. So here are some photos of the property. You can see this was built in 2013, so fairly new build as well, and he'll get some depreciation benefits as well from this property. Yeah, new property with existing tenants. There were tenants already in this property. Current valuation of this property is sitting around 580,000. You'll probably get around 600,000 in today's market, so easily an uplift of around 80,000 within a matter of a few months. Let me just look at the cash flow for this Gracemere property so you get an idea of that too. So purchased for 500,000 at a 6.50 interest rate, rents on this property at 480 per week. You can see it's negatively geared in the first year by 12,326, but then as the rents increase, and it already has increased, you can see that it's improving over time. The negative cash flow is improving. So the important thing here, it's moved up in value by around 80 to 100,000, and it's continuing to move up because Gracemere is still a very tight market, right? So very tight conditions here. The rental market is strong, the sales market is strong, so it does look good here. But bear in mind, this doesn't mean that you should buy in Balga or Gracemere right now. At the time of purchase, these were good buys, but right now I'm not too sure whether these are the good buys because they've already moved up in value quite a bit. Let's move to the third property, which was done just last month. Okay, we're going into Geelong in the suburb of Corio, right? So Corio has a different kind of growth pattern. If you look at the growth pattern here, you can see that the suburb stagnated and went back in value between 22 to 25. Corio has completely changed. If you look at on the ground, properties are getting multiple offers and it's really hard to secure something. Really hard to secure a property in this market. It's definitely turned around and it's starting to move up very fast. And this suburb does have the potential to move up in value over the next 2 to 3 years. Now let's look at the property that we purchased. So this one was the property we purchased. Just some photos of the property. Low maintenance home. It was purchased for 542,000. Rents out for 450 per week. It's a 550 meter square block of land and it was owner occupied, so there was no tenants on the property. And let me tell you the interesting thing about this property. I'm pretty sure we got this around 30,000 under market value. The reason for that is because this was on the market. We offered 542,000. The agent got several offers. They got offers more than 542,000, many offers more than that, and an offer around 570,000 as well, which was 30,000 higher than our offer. But this was the interesting part. We offered an unconditional offer. We didn't have any conditions, while the higher offers had conditions attached to it. We knew the owner's seller's condition. They wanted a quick sale and they wanted to move on, so they couldn't risk having conditions on the contract. So because we went in without conditions, offer was favorable to the owner and we got it at a really good price. Now, is it risky to go unconditional? Yes, it is. But we made sure that we mitigated those risks. So what did we do? I spoke to my broker, the broker I had been working with for some time. I asked him, okay, are you sure that we can secure finance on this? And he came back to me and said, yes, I'm confident I'll get valuation at the contract price. So that was all I needed. The second thing, the building and pest. Now I needed to get the building and pest done during the cooling off. I called up a person I know and work with, and I made sure that he was available within those 3 days, the cooling off. He went in, did an inspection, called me back and said, everything's fine, no structural issues, you can go ahead with this property. Now again, I'm not going to sugarcoat this. We did have a property manager who inspected the property as well, and she mentioned there was carpets which needed to be changed. There were some issues with the blinds that needed to be addressed. There was one of the fans that were not working. So all of this would have to be addressed, but this is part and parcel of property investing, right? If you're buying properties, you got to take care of these maintenance issues. The main thing is the growth that you're going to get from these properties, and these kind of smaller maintenance issues are going to be really nothing in the long run. The property has been secured now. Okay, if you look at the cash flow for this property, let's look at Corio. So 542,000, 6.50, rents out at 450 per week. So we are negative 13,280 at a 6.50 interest rate, but this is getting better over time. I wouldn't be surprised if this property goes to about 650 to 700,000 in a matter of 2 to 3 years, because looking at how the suburb is changing, it really won't be surprising if this happens. Now let's summarize this. So property number 1, the property purchased in December 2023. The Balga property has moved up by around 210,000. The Gracemere property has moved up by 80,000. So that's 290,000. I'm pretty sure we got the Corio property 30,000 under market value. So I added in 30,000 there. So 320,000 of equity has been built up in the property, in these 3 properties, and they're still moving up in value, right? So they're all still moving up. In another couple of years, I'm pretty sure this would have moved closer to 450 to 500, looking how these markets are performing. So the idea for this investor, now he is heading into retirement. He has 2 options. Now he could sell down the properties, live off the retirement funds, or live off the funds of the profits that he gets from these properties, or he could transition into commercial assets, right, and get passive income coming from these commercial assets, like 40, 50,000 net income. If you can buy 2 of these, then he can get 100,000 net income. The idea here is to build that equity as fast as possible so that he can use them as deposits or live off the profits during retirement. Okay, so even though you're heading into retirement, yes, there are options like this available that could make your retirement planning much better. So that was an idea, guys, of what you could do by buying the right assets in the right markets at the right time. You could make a lot of money and it could help you even into retirement. So hope you found this useful. Hope you found this content inspiring and you want to take some action. If you want to do that, then get in touch with me and we can discuss something like this and how you can plan out for your future and for your retirement as well. That's all from me, guys. See you in the next video.